Boom. So yeah, today is an exciting day. Yes, we have what is it, PPI, more importantly, retail sales. But today I'm launching super secret fundamentally based alert service, which I've been working on for more than 6 months. And it has a simple goal of radically changing the way you trade. Nobody wants to improve your trading. If you want to improve your trading, change your MACD settings. If you want to radically change the way you trade, it's going to take a lot more effort than an indicator. Yeah, it's dark in here. It's dark in my office. What's going on there? So anyways, very exciting morning. I hope you attend, even if you're already. So we have quite a few people that have been essentially beta testing. Not really. I mean, it's okay. But let's say you tried. Well, I guess I can announce it. The name of the service is QuantBox, QuantBox.co. So even if you tried it 2, 3, 4, 5, 6 months ago, and you signed up for let's say the retail trader version, and you're like, yeah, it's okay, but I don't know. Let's say you decided, it was all right, but I don't want to do it anymore. And let's say you unsubscribe. Perfectly fine. I have news for you today that will blow your mind. So if you already checked it out and you're like, yeah, it's okay, but pass, you're going to want to come back. Going to blow your mind. So come on back. So anywho, that's going to be today at lunchtime. Remember, the United States and Europe are on different time zone kind of things. Remember the daylight savings and non-daylight savings, whatever you call it. So America changed its time, and Europe, I believe, has not. So they're double check. You might be off an hour from what you normally would do. So be careful. Okay, so be careful. So anyways, I hope to see you there. That's that. Enough said. Okay. Let's take a look at you know what? I have to go through the rest of the stuff. Let me remind you that trading. All right, there we go. Looks like Windows did a forced update last night. Now I have to change the microphone on every different. Yeah, no, I know. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, did you hear that? I think you can hear that. Yeah, that's what I thought. Cool. So I'll have to change it on every setting. Hang on. Never mad at the fact he's corrupt like a senator. Yeah. Okay now. Good morning. Got white pants on, white watch. You should see it. Beautiful. Can you explain the Credit Suisse situation? I don't want to because I'm an investor. They called me yesterday and they're like, hey, Saudi Arabia turned us down for a re-up. Would you like to re-up, Wayne? And I'm like, nah, pass. Oh, true story. Yeah, what is it trading now at $1.50? Oh, I don't know. I piled in, I think, at like $5, so I'm like way down. Anyways, yeah, I made a bet. Basically, when was it? A couple of years ago when I thought the ECB would start raising interest rates, and I thought that would benefit European banking. Also, European companies and banks were cheap. I thought $5 was cheap for Credit Suisse. I also looked at Deutsche Bank. And the thing is, I know Credit Suisse actually isn't a great bank. I know that from their trading. They're actually the worst traders I've ever seen. I used to track their trading desk. But I also know I have inside information on Deutsche Bank, and I'm like, I don't know, Deutsche Bank's worse. Yet, right? You had to choose between the ugly sisters, which one you take to the dance. Anyways, as a Credit Suisse. But I don't know. I picked the wrong sister. I don't know. But hey, she's a good cook and she loves to dance. What can I say? So anyways, I don't want to go into it, Trucking Mogul, because it's too sad of a story. They were just really, here's the story. They just were not a good bank. And so now they're struggling to keep their depositors and get back on track. I guess because I bought so low, I just have to hold on and if they fail, I hope they get bought for more than $5 a share, or I hold it for 30 years. Paulie says, hey, Wayne, thanks for sharing the uranium information yesterday. Yeah, Paulie, I looked at a uranium ETF yesterday, and remember the company I talked about was Cameco. And I looked at the ETF, and something like 30% of the ETF was Cameco. And I'm like, wonder what's going on there, son? So I'm like, why would I buy this ETF and pay them money when I can just buy Cameco myself? Why do I need all that other stuff? So anyways, so thank you for being here, guys. An amazing day news-wise. And hopefully you can come to the event at noon. Okay. So a couple of things. One, register for the event at noon. By the way, it is a sales pitch, but not till the end. Because obviously I created a super secret, fundamentally based alert service. So obviously there's going to be a sales pitch. But I promise you the first 50% of it, which I think will take more than an hour, is hardcore, legit, real information, actually helpful. I'll show you the things that you should be doing. I'll show you how to get the resources for free or super cheap. Legit, really helpful webinar. I promise you that. It won't, okay? And then at the end, I'll tell you when I'm going to switch over to the sales pitch. And so if you want to bail, you're like, oh, this was really good information, but I ain't got no money, or you just choose not to want to do it, that's fine. Cool. I'll let you know when to bail. But for those that are like, oh my God, that's cool, and you want me to keep going, welcome to stay. I'll tell you, right? Essentially, I'm going to give you a choice. So anyways, come find out what the choice is. One of the first things I'm going to show you is the very, very, very first trading strategy I developed on my own regarding Forex. Okay? I'll show you what I did in the beginning. Literally way, 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 way back in the beginning. The strategy that led me to quit my job as a venture capitalist, leave the firm of 300 employees, and go be a Forex trader out of my home office. With one screen, for crying out loud. I'll show you, I've literally recreated the process. I'll start with that. And then I'll tell you why it didn't work. It worked pretty good most of the time. But then I'll show you better. Okay? Trading the news. No, it was not trading the news, but it was quantitatively based. And the reason for that is that I didn't know anything about technical analysis. You couldn't even buy a book on technical analysis, or at least I couldn't find a decent one. So anyway, I will share with that information, and of course a bunch of other things that will help you improve your trading. Honestly, I promise you that it'll be honest, real stuff. So that's the link there. A couple of other things just quickly. There's a link in the description to my book. It'd be great if you read the book and left a review. That'd be great. Okay, I'm in the process of writing a second book and a third book and a fourth book, and it'd be great if I knew somebody cared. So if you could leave a review, that would be great. And then lastly, join FX Bootcamp. The link is in the description below. $88 buys you 88 hours of training videos, and not like crappy little things about me mumbling about the market like I do every day. No, actually training videos. Some of them are like college level courses. You will get a real education for $88. I promise you that. And then lastly, I want you to visit tradersway.com. You need a broker. I recommend them. Simple enough. tradersway.com. Okay. Okay, cool. What's the difference between quantitative and fundamental? Well, you could kind of use them interchangeably, but the quantitative part is, let's say you did fundamental analysis of the euro. Okay, Ahmed? And you get to a bias on the euro. Is that enough information? Okay? No. So the quantitative is gathering all the data, organizing all the data, and then comparing. See, that's the comparing the data. So you need to look at like euro versus Aussie, euro versus CAD, euro versus yen, euro versus pound. Okay? And so imagine you're gathering all this data for each currency, okay, ranking them or creating a score from analyzing the individual economic data of each currency, and then comparing them relative to the economic data of all the other currencies. Okay. So anyways. Oh, 303 didn't like the book. You know, I'll tell you what, I did write the book. I'm not a professional writer. So yeah, but it's an honest book. But yeah, there were a lot of like spelling mistakes and the charts are hard to read. But you know what? That's the job of the publisher. And I worked with the largest financial publishing firm in the world. Wiley Publishing's been around for well over 100 years. And I sold the rights to their book. I sold the rights to the book to them. They bought my manuscript. They bought the right to sell it. It's their book. And so if there's spelling mistakes and stuff, that's on them. It's not my book. And if the charts are hard to read, well, that's on them. Right? So anyways. So I will self-publish next time. Okay, or this time, I should say. Okay, cool. Okay. Yeah, no, I agree with you, Acidity. I agree. I totally agree. You're right. Yeah, it was a long time ago. I've learned a few new things. So anywho, let's move on.com. Let's move on. Yen ripper strong, dollar ripper strong. Risk off, Bubba. Right on, Ahmed. Well, just imagine now you can have a Quant-in-a-Box working for you. No, let's not go here. Let's not. Well, you know what? Let's go here. Maida, I hope Maida's here. She's usually here. I cheered for you all day yesterday as oil fell. Cheered all day. So, congratulations. There you are. I cheered for you all day, just so you know. Watching oil fall right off that 21 down, all the way to 70. Bravo! Bravissimo! Okay, but now I'd say out. Yeah. Out. Yeah. Anyways, cool, man. Nice. All day. I'd come back to the charts and go, yes! Cool. You nailed it. I was short gold yesterday. I'm not short gold now. Ooh la la. Thank you for stop losses. Whoever invented the stop loss, I appreciate that. Bitcoin stable, but remember, we're kind of looking at risk off. Okay, this looks risk off. We talked about this yesterday in the day trading group. I don't have my drawing tool, but notice I drew this box. Okay. Oh, thank you for that. What? I need the retail sales. I don't care about PPI. Who cares? Does anybody have retail sales? Guess we could just look at it here. Isn't retail sales? Ooh, okay, negative. Month over month. What about year over year? The thing is, if people are scaling back, then they feel the pinch and the sting of what the Fed is doing. So that could lead to risk on today. Okay. So look at this. This is up, man. Thank you, Maida, for thanking me for thanking you. Okay, we'll see what happens. I bought a regional bank yesterday, so I wonder what's going to happen. I wonder what's going to happen. Oh, no. I told my wife this morning, and she's like, ooh, that sounds risky. I'm like, yeah, but it's profitable. Its profits are increasing and its profit margins are increasing. So I'm like, it doesn't sound like a bad bank. And the other thing is I bought it for so cheap. Now the effective yield on their dividend is 6.5%. And she's like, uh-huh. See, my wife is smarter than me, right? So she's like, uh-huh, oh, that sounds really good. And risky. I'm like, I know. Would I park my hard-earned money at a regional bank? Yeah. Yeah, well, I'm an owner. I'm now a part owner of a regional bank. Sure. A friend of mine used to be, what was he? He was a director of this regional bank. Senior director? And anyways, then he got hired by another bank, and then he got hired by another bank. But he used to work for this regional bank, and, he had box seats at the baseball stadium and everything, and it was great. And he said it was a great company. He said even when he left, I asked him about it. I'm like, hey, is it a good bank? Because this bank actually, here's the story. Let me rewind a little bit. It just reminded me of something new. Not new, but people often ask me, Wayne, was it worth it spending all that money going to Harvard? I'll tell you a real story about that, my answer to that. After I got my first degree, I put it on LinkedIn. Okay? I'm not joking. Like within a week, maybe two, but like very, very quickly after I posted my Harvard degree, I get a phone call from this regional bank asking if I would be interested running their foreign exchange trading desk. Huh. Real story, that's the truth. And, well, I've been a Forex trader for, at that point, 15 years. Nobody called me. I put Harvard up there, boom. I'm telling you, it was within 10 days, maybe 7 days. Ring, ring, ring. Would you be interested? Oh, God. So, yeah, you know what? Yeah, it matters. Sure, it matters. Yeah, apparently it matters. So, yes, I could have bought a used Ferrari, but instead, I have pieces of paper above my desk. Okay? Yeah, totally, right? Acidity? Yeah. Okay. Anyways, so there's the answer to that. So watching the stock market down, I still am a beneficiary of down, but I'm starting to gobble some things up. Probably later this week, I'm going to start. There's 2 funds, maybe 3 funds that I'm interested in putting some money in. Okay. And then I'm consulting for a hedge fund that has a really cool program. And I'm interested in maybe somehow finding a way to get non-accredited investors into a program like that. Because they turned 30% last year. And I'm like, yeah. In a down year, dude. So anyways, it'd be interesting if I could do that somehow, structure that. All right, so Brent coming down, my WTI. So look, I guess retail sales isn't enough to save this. More gloomy news. Yeah, well, look, it's not going up. So remember, we got to use technical analysis, right? So we could do it like this. Let me clear this out. We do know this is a high-risk area, but we're breaching a psych level, so you never know. So you got to just play the cards, right? Right? Like a 10 jack is not a good pair, but, you pay to see the flop. You never know. You might get a pair, So anyways, let's go to this price action template on a $5. Okay. And this is, okay, that's the bear zone. Well, acidity, the thing with breaking 70 is there's a verbal floor, right? There's a verbal floor somewhere. There was a time, I think the president of the United States said 75. And then when we hit 75, he changed it to 65. So I don't know what he's going to say if we get to 65. But I don't think it'll be, I don't think we're on the free and clear plan on to 60 until we address that. And I think the number was the government would buy oil at 65. But, there's also this price level. What's the value of Russian oil? Is that 60 or 65? Now, one thing that I cover in the oil trading course is the law of one price. And so Europeans say, hey, right? Whatever the Russian price is, can somebody remind me, is it 65 or is it 60? What did the Europeans cap Russian oil at? And while you get that information for me, was it 60? I thought it was 65. 60. Is it 65 or 60? Okay, well, multiple points. So the law of one price says this. What Europe did, first of all, I don't know how you police that. And I can also tell you that when you do price controls of any sort, it doesn't work out the way you think it's going to work out. Like rent control will not make housing affordable to people that ain't got no money. What'll happen is nobody will have housing. It'll do the opposite of the government's intention. Always will happen. Same thing if you put a price cap on gasoline or what'll happen is you'll run into a shortage. So nobody will have gasoline. Okay? So oil's trading at 80. Europeans come out and say, it'll be against the law, against the European law to pay the Russians more than $60 a barrel because they want to punish the Russians. So what actually happens? The only oil being sold is Russian. Why would you pay $80 a barrel if you can buy Russian oil for 60? So the world buys up all the Russian oil at the lower price, which then makes international oil, non-Russian oil, like OPEC oil or American oil or Canadian oil, that oil drops to 60. So the only one hurt is not Russia. Thanks, Europe. So 303 says energy traders are pricing in a recession. Yes, you could argue that, but you could also argue it's actually the unintended consequences of European stupidity. And I still imagine, the French Foreign Legion zipping out into the middle of the Mediterranean, boarding oil containers, dipping a stick into the oil container and going, this is Russian oil. Oh, this is Russian oil. Yes, this is illegal. Right? And then they're like, dude, the idea that it's Russian oil. Oh, well, you just take the paperwork. Yeah, the Russians won't be able to figure out how to fake the paperwork. And of course, we knew it right away. The Libyans buy a bunch of Russian oil, give the Russian oil to Libyan people, and then take Libyan oil and sell it to the world. And then they're like, but that's expensive. You have to unload the ship and then load a new ship. Why don't we just buy the Russian oil? Now we own it. And then now it's Libyan oil. And then you don't even unload the oil. It just shows up to Libya. And then you change the bill of lading, and now it's Libyan oil, and now you sell Libyan oil to France. But it came from Russia. It was sucked out of the ground from Russia. But once you buy it, you own it. You're the owner. So now it's Libyan oil. So they don't even unload it. It's just, it docks, and then it turns around and goes straight north, hits the shores of, Marseille? Where would that go? I don't know where. But anyways, bada bing, bada boom. So unintended consequences. The only oil being purchased in the world market is Russian. And bear in mind, you're like, well, but they're not going to be profitable. The Russians suck it out of the ground for probably $20 a barrel. They're just fine. Don't worry about them. Do you know what almost put Russia out of business? Cheap oil. So terribly cheap. But not because you're lowering the price, but because you're flooding the market, right? Different. There's sort of a different thing. So, yes, recession for sure. But there's also oil is what I've been saying. Okay. So this retail sales, by the way that it reacted, there's two things going on. Oh my God, what the Fed is doing is working. And then all of a sudden, oh my God, that means we're going into recession. So bad news turned to good news, which then turned to bad news. And that's kind of where we are. So I think we're getting closer and closer to, maybe a trough or something, someday. I think a short-term trough. And I think things get even potentially, not necessarily, but potentially uglier in the second half. But I covered that in January. Look at it come down. It's crazy, right? So you just keep going with the price action. So now what you do here is, let me zoom in a little bit if it lets me. Cool. Now you got to mark your territory in that zone. Okay. See, continuation, down, 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 up, up. Consolidation, continuation, down, 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 down. We'll continue that until it stops. What do you guys think? Cool, right? Cool beans? Cool beans. No, strong opinion, weak conviction. Yeah. So, cool. We'll see what happens there. Watch Brent, though, too. That's the other thing that people forget. So we hit this 75-25 area on Brent, and WTI could stop immediately. So like you could argue that it's plausible if you really drill in here. We're in that price right now. It's 75.50. That might be the end for WTI, right? Oh, Maida, I don't think you're a contrarian. I think there's too much oil and there is demand destruction. And there's also the idea of the law of one price. If Europeans said the the cap on Russian oil is 50, we'd be on our way to 50. Okay. Go to the stock market. Stock market down. Okay. In UK, stock market down on the S&P 500. Stock market down in Australia. Stock market down on NASDAQ. Okay. Cool. Okay. I have a lot of cash. And like I said, I bought a regional bank, but I didn't buy much percentage-wise. I feel good to like collect a 6.5% yield, especially if we have 6.5% inflation. So, I get a little inflation protection. And I plan on holding that stock position forever. Cool. So got that, but I still have a lot of cash, and I'm still triple leverage short. Okay. And being picky and choosy. The thing is, it's a hard decision because I'm going to go into covered calls, and you have to choose, like, when do you want to own the stock in the covered call portfolio? Well, I don't want to really own it if it's falling, but then you don't want to really be writing options on the way up. So, it's one of these things. It's hard to be conservative and enter trades while you're being conservative. So I've been kind of hedging. So I have some alerts set at certain prices in which I might just bite the bullet and just say, I think sideways generally, right? Richard says covered calls get you into the stock for free. I don't know. No, I don't agree with that. But just like a carry trade, I mean, they're just carry trades, essentially. Let me get my drawing tool. It's a carry trade using stock. Now, you could have a basic carry trade in stock. I don't know. Let me change this, I guess. Look at that. Just kick off the 4-hour 21. Couldn't be any easier, dude. Look at that. Just nuts. Blank. So you could have carry trade stocks. Okay. So you could do this. You could buy high dividend stocks. Okay, so you have 1, 2, 3, 4, 5, 6 stocks. But the stocks do this over time, right? Okay. So the assets change value, but every quarter you collect dividend. Cool. Now, the stock portfolio might be plus or negative 10% all the time. But every year, let's say on average, you pick up 6%. Okay? So there'll be years in which the whole portfolio, the asset appreciation, is up 10% and then maybe down 5% and then up 8% and down 2%. And this fluctuates. But every year you collect 6% on top of that. Hey, Johnny, I'm glad you had heat as well, huh? Okay, so you got this. Now you can add to this where instead of 100% of your money in the high dividend, you put 80%. Okay? And we'll do this as a covered call. Covered. Okay? So now you have this 80% paying you your 6%. So 6% on the 80%. Plus the standard plus 10 minus 10, kind of meaning just sort of up and down, up and down, up and down, up and down. Maybe not producing great results, but good results because it's good stock paying dividends. And big stocks, not like little, wildcat oil drillers. No, I mean like big companies that have been paying dividends for 30 years, that kind of stuff. So anyway, so now you take 80% of your money and you do that. And then with the other 20%, okay, you're writing covered calls, which are limit orders, essentially. So on the way down, what you do is you write an option. Oops, I wanted that red. You write an option, you sell somebody an option, and they pay you money for it. And it says, if it goes up beyond this, I'll sell it to you. But you think it's going down. And then time goes by, and then you're like, if it goes above here, I'll sell it to you at that higher price. So they're like limit orders. Stock falls. And then you write another option. Hey, if it goes back above here, I'll sell it to you. And it falls. Now, in this falling market or sideways market like this, when you're like, I'll sell it to you at this price, and it falls. And then it comes up and you're like, again, you write another one. I'll sell it to you at this price, and it falls. Okay? And then you say, I'll sell it to you at this price. Uh-oh. This one, you actually have to give them the stock. See, now you don't benefit from this new rally because you sold it to them at that price. But you bought it down here, so it's profitable. But the thing is, if you time everything right, okay, this option expired worthless. This one expired worthless. This one, you sold your stock that you already owned at that strike price, which is profitable. So yeah, you give them the stock, but you were profitable. And then this one expired worthless. This one expired worthless. Oops. This one expired worthless. But the issue is, or the what you're doing over here in the covered call is every time you sell one of these, you make money. You sell them the opportunity. If price goes up, I'll sell it to you at that high price because they think it's going to go even higher. And remember, they're leveraged 40 to 1. That's why they're doing it. The thing is, you would do this when you thought sideways or down. So what happens is you're collecting money every time you sell these options. Okay? So this high dividend covered call strategy might produce, let's say, 10% a year. Because you're collecting money 6% on the 80%, but then you're collecting more money on the options, which then puts on the whole portfolio of 100%, 10% a year instead of 6%. Okay? That makes sense in a sideways market or a down market. Now in an up market, you're going to get stopped out, or you're going to have to sell your stock positions to the person that bought the option from you. Now you're still making money. The thing is, you don't have the stock in your portfolio anymore. So now you got to buy it, but now you're buying it at a high price, and that's where it gets. So you should be buying on the way down, building a portfolio of stock you never intend to sell, and then write options to people that you intend to never sell. You understand? So anyway, so I'm looking at that strategy because one of the things I think of is, what if, like Japan, the United States goes into a lost decade? What if we're here for 5 or 6 or 7 years? Here meaning the stock market below 5,000. S&P 500 below 5,000. So we go from 3,000, right? We go from 5,000 to 4,000 to 3,000 to 4,000 to 3,500 to 4,500 to 4,000. And we just kind of just tread water for years. Well, I want to pick up income from dividends and from writing options to dummies that think the stock market's going to go up. They keep betting and praying. Cool. Sell those suckers some options, huh? Huh? You're selling them a worthless piece of paper. Gotta love that. I mean, think of it. It's insane. It's legal. Sell somebody a worthless piece of paper. Okay. So that's how I would do it, acidity. You're selling something that you believe will be worthless in the future. And you have no intention of getting out of the stock portfolio, which is a good performing stock portfolio. And even in sideways to down markets, okay, remember you're not mark to market really. So if you buy a stock at $80 and now it's trading at $60, what do you care? If you don't sell it, it's not a loss. It's like your house lost 10%. Well, you haven't sold your house, so you haven't really lost 10%. And in 10 years, it's up 10%, but you still haven't sold it. So it's not like you really have the money in your pocket. So what you do is you sit there and you're like, okay, for the next 2 or 3 years, these stocks are kind of going to move sideways, maybe down for a year, and then they'll be back to break even the following year. And you just pick up the 6% dividend. And then if you can make some extra bucks by selling people that think the market's going to go up significantly, you just sell them some options. And if you're wrong, you still get out of your stock position profitably. So you're like, well, shoot. I bought it at 80, it dropped to 60, but then I sold it at 90. So you're like, shoot. You accidentally, you wrote an option and it backfired. Stock price did go up higher than you thought. So you accidentally sold your stock for a profit. Oops. But you don't think it's going to happen, so you believe it's not probable. So you write the option and you think there's like an 80 to 90% chance that it's going to expire worthless. And it does expire worthless, so you keep the premium. And it's just like, Yeah, Jimmy says people want to believe in a V-shaped recovery. I don't think it's going to be like that. I think it's going to be, the very best, a W. Okay? Well, that is, right? Yeah, right. Well, that's what I mean. So you write a call because you are selling time. What you would be doing in that scenario is saying not up. Okay? So anyways. And the thing is, what I like about it is even if you're wrong and the market does go up, you get knocked out for profit. It's not like, oh my God, we took a bloodbath. Now you're like, well, right? But anyways, we'll leave it at that. So look at this, guys. This is from the day trading group, maybe the swing trading group. And looks good to me. Okay, we're running into old support now. And then you got to write this one. Okay. So what you do is you assume we're not going to break. You're going to assume sideways forever. But if it does break, then you assume we're going to fall to this level and then move sideways forever. Okay? Just like this, down, 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 consolidate, consolidate, down, 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 consolidate, consolidate. So down here, consolidate, and then break lower. Okay? Okay. I sure enjoy being a dollar bull. My gourd. We've done very, very well recently. Beautiful. Hope it continues. Sucker born every minute for sure, right? So anywho, lovely, guys, lovely. I'm ready for my second breakfast already. Whew. Might have to go. Gotta go. Yeah, I think I'm just going to go. You want to do Biddy? All right, let's do Biddy. Now, look, if dollar's strong, Bitcoin's probably down. Take a chance on me. Take a chance. Take a chance, take a chance, take a chicka chance, take a chance, take a chance, take a chicka chance. Okay? So right now we're farting around, probably waiting for that 4 hour 21. So I would say on a risk off day, more down than up. Yes, the 15th of the month is usually an interesting day because that's when CPI typically comes out. So like after you trade for a while, you don't really look at a calendar anymore. So I just feel, okay, I feel like in the middle of the month, usually a Tuesday or a Wednesday, CPI comes out. Okay? So yes, so that's just typical. Okay, Jean-Guy wants to bring up peso. Sure. Now, I was heavily short peso yesterday and got knocked out of break even on both. So I'm right back to where I was. No harm, no foul, no money lost. And maybe I get a try again scenario. But on a risk off day, probably not, but maybe a little bit later. Notice that it occurred right where you would expect it to occur, okay? But who knows? Today could have been a huge risk on day and I would have been heavily short and I would have made tons of money. In this case, no. Okay, so break even on that. And I think break even on gold. And so even I was using these trades to hedge each other, but both trades. So I was long dollar and short dollar at the same time, and I got knocked out of both. So it's just one of those days, right? One of those days, bro. Okay. All right. One last time, I want you to attend today's event. The last I looked, there were hundreds and hundreds of people registered, so I'm looking forward to that. If you register, I'll also email you a link to the recording. Okay. So you will learn my first quantitative strategy from 20 years ago. I'm going to teach you 3 ways to improve your trade fundamentally. Okay. You will also learn how to trade like a farmer. You will learn how to trade like a Marine, a U.S. Marine, the best kind of Marine. And you'll also learn how to trade like a professional floor trader. There's so much. So I encourage registration, and I hope I see you today at noon. And like I said, I will give all that to you, and at the end of the presentation, there will be a sales pitch. It's okay. It's okay. And you're like, dude, you want to avoid that. Well, attend the first half, and then I'll tell you, literally, I'll ask you, do you mind if I continue? And if you don't want to, you can bail. It's totally cool. But I think you should still attend. And by the way, I'm having fun with it. So it's going to be fun. So roll with it. I think, like, literally when I say roll with it, I'm pretty sure some of you guys are going to roll your eyes a few times. You're like, oh my God. But it's just, okay, just go with it, right? Just go with it. It should be fun. So there's a bit of tongue in cheek to it. I enjoyed putting it together, and I made it kind of goofy. So, but at the end of the day, I promise you there's real value. Yes. Yeah. So if you click on the link, it brings you to this page. Oh, wait, that's not it. Yeah, well, it is. It's the old version. There you go. That's what it looks like. Okay. And so 1 hour before the event, you'll get an email with the link. I encourage you to log in early as well, because I'm not sure how many people are actually allowed into the Zoom room. It might be capped at 200 people. I honestly don't know. Henry, preferred. The reason for it, let me tell you why. QuantBox as a service sits on the Google Cloud. Okay? So you can't access the Google Cloud without a Gmail. Okay? So that's it. So that's why I suggest it here, because at some point you're like, oh my God, I want this, I need this. Cool. You'll need a Gmail. And don't worry, it's not hard to get a Gmail. But you can't access the Google Cloud without Gmail. You see? Hey, better than requiring you to have a Microsoft email, huh? And remember, for those that already used the service, maybe you tried it out a few months ago, and you're like, yeah, it's pretty good, but I don't know, you're not using it very well, or just whatever. You're like, yeah, it's pretty good, but I'm gonna cancel. I'll tell you what, I'm going to make some announcements today that will blow you away. You're probably going to want to re-up. So even if you tried it and you're like, it's cool, but not that cool, come to the meeting today and I will knock your socks off and you'll probably want to re-up. Okay? So anyways, that's that. I'm passionate. I apologize if it's coming across incorrectly. I'm just passionate. I built this for you. It actually started at FX Bootcamp where we started to build this ourselves. And it was very, very complicated. So I built it so it's automated. But this literally started in the swing trading group. And now it's a bajillion times better. And of course, it's automated. So, right? Amazing. So anyways, peace on earth. May the pips be with you. May your profits be above average. Pachow. Boom. That just happened. What?